All right. Hey, everyone. So this is CyberBulls episode 5. We love investing so much that we are streaming live. Right beside me or below me is Christian. So he's a momentum investor, and the dude, he's very, very funny because he will only buy when there's storms and he'll only sell when it gets too sunny. So here also with us is Xander. So he likes to make bets here and there. We call him our YOLO Bull. He is young, he's ambitious, has got a face full of hair.
Not that young.
My name is Herbert. I'm the oldest, and trust me, I've been around the block. So I have one major weakness, though. I can't help myself. I keep falling in love with just one stock. All right, guys. So this is CyberBulls weekly series we've been doing on both YouTube Live and Twitter Spaces. We're doing our best to just better understanding our investments and Tesla in general. Today, we're going to find out what makes Tesla a once-in-a-lifetime opportunity. We keep hearing everybody say this. I want to hear more specifics of why specifically you think this is once in a lifetime. Want to explore further what is the difference between price and value. Some people look at the price of the stock and they determine they think that that's the value. Want to explore further what that is. What is good debt? What is bad debt? And we've been hearing that China's economy might be going through a spiral, and we'd like to find out what is the impact to Tesla if that does happen. If there's time, I'm going to talk about margin loans. I've been getting a lot of people kind of interested in hearing more about what that is, and I can explain more what that is. So welcome, everybody. This is our first episode to do this, and I'm going to be able to do my first time here. I'm going to show a quick video, a 20-second video of our intro. Tell me what you guys think about this. Nice. Okay. Our first one.
Everyone on Twitter's like, why is there dead air?
We did a 20-second intro video. We'll see if people like that or not. Okay, so let's get started with the big topic. Why is Tesla a once-in-a-lifetime opportunity? Why is it something that people think that it's going to be the greatest company in the world with the greatest potential for returns? What are your response, guys?
Come on, Christian. Age before beauty. Go ahead.
So why do we think this is the greatest company in the world? Is that essentially the question?
You bet.
So for me, not only is it a fundamental story of EVs, which is the base business, which I base the valuation off of, you get, and what we talk about like in investing, call options. We have FSD, we have Tesla Bot, we have the energy business, we have the insurance business. So we have all these branches that are just starting. They're almost like startups within a bigger company that have the potential to be, multi-billion dollars generation of things. The semi, that's another, just all these layers that will take time to play out. But that's why the opportunity is so great. So when we look at Tesla and we say, well, some people say it's already a $900 billion market cap. How high could it go? They don't really factor in all these other things. Also, they don't factor in how fast the growth of the EV business is doing, which is going to contract that multiple down. And we'll probably get into it. But basically, if the EPS is accelerating so fast, you could have a contracting PE and still have major stock price appreciation. So for me, just to sum it up, it's all these, I think you refer to it as an ETF. I wouldn't go that far to say it's an ETF because it's one single company and it could still be brought down. There's still things that could affect Tesla that if you own the S&P 500, that you would not be, because you have 500 distinct companies. So it's not really an ETF, but inside of it, there's lots of startup businesses that have opportunities to become that multi-trillion market cap company.
Unsatisfying answer. Go for it, Andrew. Xander.
I mean, I was with him, and then he said there isn't a bunch of companies within one company. Which I don't know, Christian. Did you drink some kind of what's in that cup?
Must be the water I drank.
Yeah, what's in the cup, bro? So I think it's a crazy company. I mean, to say that it's not in an ETF, optionality is a great point. It's the insurance stuff, the FSD, the energy, but like I don't even want to go that far. Just on the car fundamentals alone, you look forward. I had a debate with my childhood friends this morning regarding this topic, and he was making fun of the forward PE. I don't know if you wanted to talk about that a little later, Herbert. But like he was actually asking about that. And he's like, "Oh no, the rear one is the one that matters." I'm like, do you even understand how quickly the company is growing? So to me, it's just the mathematically speaking, looking at earnings that are on the horizon, it's the easiest call I've ever made in terms of looking at a company and saying like that company is going to make it, except now I have money behind it. I've never had that before. This is the first company where I've put my money where my mouth is, although I have looked at companies like Facebook and Microsoft and Netflix, like these companies as I grew up. I'm 40, so I wouldn't say I'm young or whatever you said in the intro there, but I feel old. But next week I'm shaving this. That's it. Even though I'm not done with the store, we're gonna get that golden cross, right? That's what's gonna happen. No, wait. That we need October for that. But anyway,
Okay.
I don't know how to answer your question, Herbert. There's just so much behind this company, so I'll leave it to you. I'm sure you got a list.
I think you both need to leave it to me because they're both very unsatisfying answers. You sound like you're
That's what I did all right. That's what I did all right.
Yeah, I guess so. Okay, so I mean, let's break it down. Okay, why is this a good investment? Why is this a once in a lifetime investment? Why is this something that we think it's going to have the greatest return? So what I'm looking for, what defines a lifetime opportunity for me, is a company with the greatest chance for the highest return with the lowest risk. Okay, the greatest chance is that you're looking for a company that has, we talked about last week, right? An amazing team with the fastest innovation, the ability to innovate so quickly and to prove that they can get things done. The greatest chance is because they have the largest market opportunity available in front of them. And so when you say that there are multiple businesses in one company, true, but so is Microsoft, so is Amazon and so forth. They have hundreds of little companies within one. Why Tesla?
Okay.
Because they have the greatest market opportunity for the largest markets, right?
The TAM. You're talking about the total addressable market.
And then you combine that with the innovation of them being able to revolutionize that particular market. So we're talking about automobiles, right? One of the biggest, largest market. There's a whole completely change of all cars to become electric vehicles. That's massive on its own. Energy is the largest market, and they are going to take over oil and gas, or not take over completely, but take a huge chunk of that. And they are leading in that space, right? And then you just now you want to add on the other things. Absolutely. So the greatest market opportunity, the greatest potential, the greatest chance to win that, and the lowest risk. So we talked about this last couple episodes before, right? That this company is actually fifth largest company in the world, but they have no debt anymore. So they weren't the lowest risk 2 years ago, 2018. They certainly were probably the highest risk company for the last 10 years. But today, they're no longer a risk. Okay. And then so now all of that combines together to, I'm going to steal Christian's favorite word, earnings. I'm going to own that word. I'm going to say earnings more than you. Christian, I have almost came up with a nice little a sound bite. If I counted you to say earnings 6 times, every 6 times you say it, I'm going to play this thing. Ding, 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 ding.
Okay.
I'm the earnings machine now. I'm going to be the guy. But the point is that if you have a company that is growing 50%, that's so big. Like, it's one thing to be growing, doubling as a company when you're small. That's understandable and that's exciting. You can make a lot of money when you invest in that. But when you invest in a company that's massive and large with lots of revenue already, then yet they're growing by 50% every year for the foreseeable 5 years at least, if not forever. Some people say, oh, you can only count for 5 years. And then at that point, law of large numbers. Now your your ETF concept makes sense. Now they go, okay, well, what other business are they going to pull out from under the hat? And we're talking bonds, we're talking energy. So,
You're right, Herbert. Let me chime in now. So here's why earnings though is so when you, this is a little debate between me and you.
Okay.
When you say it's no risk, I think you should clarify it's no risk that they're going to go away, a bankruptcy risk that there was in 2018, 2019. I think that's more important. There's always risk in owning an equity. So I think that's the first point. Second point, I'm glad you took up the earnings mantra, because in order for the energy business to go, in order for FSD to play out, in order for Tesla Bot, you need to support the valuation. And I don't want to depend on market participants understanding FSD, understanding Tesla Bot, because odds they won't. So in order for me to wait for those stuff to play out, I need the fundamental earnings story to come through. And that's the EV business. So when the earnings are just piling on and it's, they're 60% or 80% year over year, when that's happening, I don't need to worry about the valuation collapsing because no one understands these other businesses that are small right now, and then they're going to be big. But I don't want my stock price to go down for them to understand the story 2 years from now or 3 years from now. That's why earnings are so important, because they're undeniable. When Wall Street gets the earnings and then they put a forward multiple or even a trailing multiple on it, and they see the growth rates, it's undeniable, and that will support the stock price. That's why it's so important. Xander, any comments?
You there, Xander? You guys
Can you hear us?
Sorry, I missed it. What was that?
Your turn.
So I just went. Yeah. Did you hear me? So I was just saying, do you have any comments on that? The fundamental story.
You got it. You got it. I don't need to add any color to the bull thesis. I think everyone listening is well aware. But if I was to add anything, it's that you're like there's risk involved, right? So we can't say that there's no risk, but it's the easiest double that I like. Just looking forward 1 year, I see a double. I don't know if you guys do, but like I see a double coming, and the idea that you have to be in the markets for 8 years to do that, and here I can put my money behind it, and even if it's not a double, but it's like 50% or whatever, like these numbers are ridiculous. And obviously there's macroeconomics that can cause it to not play out the way that we do, but I don't care. I'm going 5 years out, 10 years out. Like it's just that safety net, or that peace of mind that I have, that all I have to do is just not put all my money into leaps and buy some shares, so to give myself that protection. I've never seen anything like it, and the earnings will speak for themselves. I can't wait for Q3 numbers, but Q4 is just going to be a monster.
Okay,
I think that's when you'll see it.
Let's talk about this term once in a lifetime or once in a generation, right? So as I look at for stocks, I'll get things that I think are going to be, impactful, number one, but taken over, revolutionize an area, and therefore the sales will come and the earnings will come, right? And so the one I often use, an example, many would, is let's say Apple or Google or Amazon. So to say that Tesla is once in a lifetime or once in a generation, well, we had Apple, Google, and I'm sure I'm missing other companies that people think fall into that category. What makes Tesla different? What is it about them that is people are considering and saying, this is once in a lifetime? You're here at today. You're here at this moment, right? Which is, I actually think today is actually the greatest moment ever, because as everybody knows, many of us, we invested in Tesla in 2012. That wasn't the greatest moment because
just you.
But it's been flat. It's been flat.
2019, I came aboard.
Right. So
Me
2019,
too.
2020 was the moment.
But I have to
to
answer
come
your
on board.
question when you're ready. Yeah.
Yeah. It's the moment to come on board. because that's the time when
Yeah.
the company no longer is in the brink of disaster, and that's when things are flying. But even now that they have a base, they're about to fly even more because they have 4 factories, because they have the company already, everything's moving already. But why is this once in a lifetime? Go ahead.
Let me tell you why.
Yeah.
Yes, Tesla the company, but here's why. Its leader, Elon Musk. That's what makes it. Here, Tesla is full of wonderful engineers, the smartest of the smarts. I get all that. But Elon Musk drives the boat. Nobody in that company is coming up with, we're going to make Tesla bot, we're going to get cars to drive itself and do a robot. That is all Elon Musk's vision. That's Elon Musk not stopping. That's Elon Musk, the richest man in the world, working his tail off to do all these things. That is the separator from these other companies. It's Elon Musk's drive. It's his unwavering in the midst of the hardest moments to keep going until you get the job done. So that's what for me makes it. It's the leader. Yeah.
I'll argue with you.
All right.
Sorry.
That's great.
Elon Musk is probably the greatest business leader in entire history.
Not probably. Not probably. He is.
Having said that, people said the same thing about Steve Jobs.
He's better than Jobs. We can have a debate on this. He's better than Jobs.
No. I agree. He's better than Jobs. I'll say that for you too. But what I'm trying to differentiate is that I think the leader, of course, matters. Of course it matters. But I think the reason why this is a once in a lifetime versus Apple and Google and others is because of the market that they're in and what market they're trying to beat.
But Herbert, you don't get these markets without Elon. Zach Kirkhorn or Drew Baglino is not making a Tesla bot. Drew Baglino is not saying we're going to drive cars around so you're missing it. Elon is driving the boat.
Fine. But okay, well, yeah, okay. You're right. But what I'm trying to say is that what is, I don't even think he's picking the market first, right? He's picking what is the area that has the greatest potential to impact the world, and nothing is off the table. And that's why he had the galls to go after energy, right? And then now bots, and then autonomous driving, which people thought was impossible to do, but they're going to attack it. These markets are just massive. They're like he was talking about. If he solves bot, this is going to change every business in the world.
Right. There's no size of the economy if you have a bot. The economy could be infinite because you don't need people. But again, to speak about it, the reason I think it's Elon, I think you kind of agreed, and then Xander, you could chime in, is because look at what else he's done with SpaceX. Like these things are not, no one else is even doing what he's doing, landing rockets in the middle of oceans. I know we know all about this, but that's why, to me, I think this is a good topic because I love this topic. All the greats from the past, I respect them, I admire them. But I'm just going to call me a fanboy, call me whatever you want. This is the evidence. SpaceX, Tesla. I mean, he's going. These are new startup electric vehicles going to Mars. Tunnels. That was a side joke. The Boring Company, Neuralink. I'm just saying, no one else is even close to even trying these things.
Sorry, Xander. I'm not going to give you your chance. I got to go at this guy.
No, it's okay. It's okay.
I got
digging his own grave.
So Elon is the reason. I'll give you that.
Yes.
Okay. But he's also the reason why I'm talking about the stock. And okay, no, at the end of the day, I think he's a business genius as well. So because of him. Okay, I just talked myself out of it.
You mean his tweets? Are you upset by him? Is that what you're referencing? Okay,
I'm sorry. I back up.
Sorry, you better back up because every time I hear you talk, it triggers me. You can't separate Elon Musk from Tesla. You just can't. So you're trying to do it. Elon Musk, as much as you want to say he does this, he does that, Elon Musk loves Tesla. He loves his shareholders. He will do long-term what's in the best interest for us. I believe that 100%. Xander, go ahead.
That's it. I invested in the jockey. If it wasn't for Elon and his, I was telling someone that now is a pretty good time to take a look and do your research. If you're not, and I gave him a deadline. I said October 3rd is a Monday, so that's your deadline because Q3 numbers are going to come out, and they are going to surprise to the upside, in my opinion. Obviously, none of us have a crystal ball, so don't listen to us. But so with that said, I just think, you know, like he stated, oh, but maybe, you know, like how do you know this stuff? And I just think that he's never let us down. They're pushing as hard as they're humanly possible, and it's really his doing that's caused you know, the stock to come up. And then Herbert, when you say like, oh, but it's Elon that caused it to come down, but you know, most of it seems strategic, and if as long as you're not short term, none of it should hurt, right? It's these like short term call options that we're taking and trying to play that we get burned, and I've been burned multiple times with that. That like it's long term investing is really where it's at, right? It's just, it's your strategy is good. You know, just buy it and just hold it. You don't need to worry about whether he tweets or does what he does. You can't argue with his method, in my opinion.
Okay, I've got a clarification that's going to save me. Okay. The reason I say this is that Elon is critical for the success of this company, the success of the business, the reason why they're generating so much money, the reason why they're going to, you know, win the markets and all that. What I was trying to say was trying to project that forward is that at this point in time, we don't necessarily need Elon anymore for this stock to still be considered the greatest investment for a lifetime or generation. Is that not true? That yes, Drew Baglino could take over, and yet the revenue will continue going to the record numbers we'd never seen before. The markets will still be one. The stock price will still double, triple, quadruple, 10x, despite, you know what I mean? Like it could have 100x, but it only went 10x, but it's still the lifetime of investment. Like, you know what I mean?
True, but let me pick a bone here. I agree that you could get a manager in there and they could run it and talk to Wall Street real nice, and you can get your double and triple over time. But if you're looking for 5x gains, 10x gains, I don't know you get that without Elon, because you need Elon out there promoting this stuff. Like, no one's just going to let robo-taxis happen. Elon is going to use his bully pulpit to show the world and convince people through various mediums that this is what's necessary to save people from accidents. He is going to, you know, he is going to will this to happen. So I don't know that you get these crazy gains without him. Maybe you get your double or triple like a normal stock, but I'm not too sure about that 10x without him. Just my opinion.
All right, for those in the audience that just heard Christian use bully pulpit, it means a public office or position of authority that provides its occupant with an outstanding opportunity to speak out on an issue. I'm an immigrant.
Twitter. His bully pulpit is Twitter.
I have to Google this stuff.
The bully pulpit for him is Twitter, so he's all political. So Twitter, using YouTube, you know, through events, that is the way, his megaphone. So and being the richest man in the world, he can, you know, he can do things like by Twitter, maybe, that other people can't do.
Okay, well, it is a once in a lifetime, from my opinion, and we should always say there's a caveat for everybody listening. We are not financial advisors. We are just three guys having fun talking to each other. Don't base your opinions or decisions based on what we say. We're just having fun.
To wrap up, I'd like to share a quick thought. So, and I think I've mentioned it before, but when you're witnessing transformational company that's transforming how we navigate the planet as a species, just like you saw when iPhone transformed how we communicated, right? Video and music in your pocket, all of that stuff. You're seeing that with cars, smart car, dumb car. that is so easy to spot that
Mhm.
anyone that doesn't like anyone that's going to argue against that and try to say that it's going to take a long time or there's going to be competition or all of this stuff, there is a first mover advantage, and it's that simple. You can see that what Tesla, the impact that Tesla had, and you had plug-in hybrids prior to that. You had Toyota, Prius, all of that. It didn't have that effect, even though it was transformative product, but it just didn't have this kind of effect.
And what I was going to say was, when I say it's once in a lifetime, once in a generation, and how you invest, it depends on your age. We talked about this before, and what your objective is and what your cash needs are. All of that matter. But imagine if you're 20 years old, 30, 40 years old, even me, right? It doesn't, the ability
Late
to
60s?
have.
I'm thinking 55, but he won't say. I don't know.
I will say I do, but so that's
Say
not the
mid.
point.
Okay.
That's not the point. But the point is that imagine when you discover you happen to be living at the moment when this company is existing, but now is at the point where it's about to. I keep doing this, right? Exponential growth, because
We're in the moment. You're right. Yeah.
4 factors in place. Cars already considered to be one of the best and safest cars in the world. All the infrastructure's in place, superchargers. They're already designing the bot. They're already well ahead with FSD. All of these could take time to develop, but it's likely going to happen in your lifetime. And so if you're here 2030, what's going to happen to the stock? You're going to watch this thing become the largest company in the world very shortly. I'd like to ask you guys, when do you think it's the 5th largest today by market cap? When does it become the biggest company ever? And I think he said, right, the day that Tesla's market cap is bigger than Saudi Aramco, that is the day we celebrate.
Yeah. So again,
I'd go after Apple, but okay.
I would say in that 2024 area, I could see 25. Yeah. Well, 3 trillion. So that would be, we're at 900 billion. That's Apple's not going up. If Apple goes up a little bit, that's, a 5x to a 4.5 trillion. So that'd be great.
What's Saudi Aramco worth now?
I don't know.
Saudi Aramco I think, overtook Apple as the largest. I don't know if they still are, but because oil had gone up but yeah, I agree with you, Herbert. But did you see what you said at the end? Elon will make sure. Again, you went back. Why? Who said that? Elon said that.
Yes, he did.
So that man's will is driving the company to become the biggest company in the world. I don't know that your average. I don't want to slight it. I love the Tesla executive team, but I don't know that their main goal is to be the biggest company in the world and transform humanity. I just don't know that I think that's Elon's goal.
I know. Okay. I think the entire company is bought into the mission, and they are desperately wanting to succeed. And so it's not about the largest company in the world. It's about making the greatest impact.
It's about executing it to become the largest in the world.
Wait, can this be correct? Saudi Aramco is worth 8.39 trillion?
I think it can be correct if they're not public.
Is it? No, they are public.
I just Googled it, Saudi Aramco market cap, and it says 8.39 trillion. I did not think that it was that high, but okay.
I don't know.
It's not the word is not metaphor, but it's a symbolic, right? If you can have higher market cap than an oil company, right? And yeah, go ahead.
But you look at the ExxonMobil. ExxonMobil used to be the biggest market cap in the world. It used to be right. So that fell away because investors looked at oil as something of the past. It's come up recently because of the crisis and the oil and the necessity of it. But technology has taken over, Google's and the Apples, and now Tesla coming up. So that's being valued, and that's where our society is going. Right? It's becoming more technologically driven rather than we need that for the bridge. You saw Elon in Norway. Fossil fuels is needed to bridge us to this new future, right? Yeah.
Another site says that it's worth 2.235 trillion. So I don't know what that.
I don't think that 9.
I've never seen such a high number.
No.
But I'm telling you, when you Google the first, just in Google, wait, where's the camera? There you go.
Yeah.
It says 8.39 trillion, so it's crazy. But it's that doesn't sound correct. So I don't know if that's in a different. It says SAR, so maybe that's a different
Maybe it's
type
in
of.
Saudi Arabian money.
Yeah, exactly. That's probably what it is.
This is the beauty of this business. It's not just a car company. It's actually competing against Chevron and Esso and these other gas companies, right? It's competing against oil to a certain extent with the energy business and so forth. But yeah, what's also very, very exciting, the way I explained it to my wife, that she really then understood the market opportunity. It took me for a long time to kind of explain it to her. What I said to her was, think of it, what happened with Apple. Apple came out with the best, smartphone in the world, but another company came and Android, and they took over 85% of the market. So Apple has 15%. But even then, Apple still now is the largest company in the world. Even then, they're still a multi-trillion-dollar company in the world. So even if the competitors come and all these things happen, there's nothing stopping Tesla at this point. Now, what would be very interesting and fun would be if the competitors do not come and they don't just get 20% of the market, but rather get 50% of the market.
Yeah. That's the thing, because we got 75% of the US EV market right now. Like, who's coming? I'm waiting for them to come. I don't know if they could scale. That's the problem.
But let's not assume that.
Sorry, that's what I'm saying. I'm assuming. Just assume. But I would say you would have to assume they're going to get at least 25 to 30% of the market.
Just go 20, go 15, go 10. It's so. The numbers are so compelling that you don't need, you're going to lose market share, right? As soon as a competitor enters, you're going to lose it. But we're not competing against other EVs. We're competing against combustion vehicles, right? I just took a picture of a Taycan that was in my parking lot, and it's the first one I've seen in the wild, and I talked to this person. It's first EV. That's the first EV. So it's interesting how this is happening, and people are adopting it, and we don't need to go after 50% adoption from Tesla's perspective.
Okay.
What is that? What you got?
So I'm just reading out this tweet from Alex Voigt at the very top here, and we're going to talk about price and value. Oops, what's this?
Bye.
Oops, sorry guys.
Oh, my favorite Charlie Munger.
Okay, so his tweet basically said, instead of meaningless price targets, the really important number is the increase in the intrinsic value. So if you still confuse price and value versus value, then you don't know how to determine the latter. Better don't invest in Tesla. Okay, so people look at the price target, and I'm assuming that means stock price. They're looking at what they think the stock will go to. Instead of doing that, you should be looking at the intrinsic value of the company. Go ahead, guys, and tell me, what is the difference between value and price?
So I'll go real quick. So this is more of an art than a science, but I'll tell you the way I think about it very simplistically. Price is arbitrary. Price could be, you could have a stock at 500. This is where people get screwed up new to the market. They think a $500 company is better than a $60 company. Well, we know from splits, like that doesn't matter. But a newbie be like, why do I want to, that company must be better. So price is just an arbitrary thing. Value for me is, what is the company doing for society? That's one way to do it. And then what do I want to pay for that? Yes. No. What do I want to pay for the value they're providing for me? So when you say intrinsic value, intrinsic value could be, I could be valuing FSD, but if someone doesn't believe in robo-taxi, that has no intrinsic value, right? So intrinsic value is in the eye of the beholder. So the value I see right now is what you can feel. That's intrinsic value. Intrinsic means it's already there. So Tesla bot is an intrinsic value to me. Now, it may become intrinsic value. Intrinsic means it's already there. And Xander could speak to this with options. Intrinsic value means it's in the price. So to me, the value is different in the sense of, I believe Tesla is great value now because of what we know and the earnings growth. So that's the way I think about it. Xander, am I wrong on this? When you talk about
right now, I just want to hear Herbert about had a conniption when you spoke. So go ahead.
I know, but Because that's true. What is
I
intrinsic value?
yeah, the way you describe what value was, it sounded really weak, man. It's
Well,
funny.
because
People
Ooh.
think
value, look, Herbert, value isn't, look, if I told you that, you know, society, value is, it's what you do for the world. Meaning, if I have this great product, but nobody wants it, it has no value.
Come on,
Everybody
Christian.
wants to be a part of it.
no.
We're
No?
talking about money here. He wants to
Yeah.
know about the money, right? He wants to know what is the difference between like hopium and
Okay.
actually
So I'll give you the
looking
basic numbers.
at
I'll
the
go right to the
value of.
valuation. Yeah.
Yeah,
So right
let's talk
now
that.
we're trading 100 times trailing. Right now, 100 today we closed 100 times trailing 12 months. So if you do, I'm going to do it old. I'll convert it down. $14 by the end of the year with a monster 3 and 4, and you contract it by 20%. 100 goes to 80 on the trailing. 14 times 80 is 1120, right? So it would be a 373. We're at 277. That's 35% upside. So if you go out again, just EV business, and you go from 14 and you say we're going to do 24 in 23, $24 in 23, and you go down again and you go from 80 and you go to 60, I'm being conservative. Now you have a close to a $1,500 stock price. So to me, that's the value, right? Because even with the market giving it a lower multiple, the earnings growing is making the stock price appreciate to your point with your double, Xander. So that to me
yeah.
then is the value.
Let me explain it my way and explain it the way I do it. Okay. You go to eBay and you look up for this bag, a purse, and the price says it's $50. And then people will argue and they'll say that's the actual price because there's a market demand and it's what you said, which is what consumers are willing to pay for something and how it balances out. That's the actual price. That's not the actual price. That's how that's one way to look at it. The way I look at it, what's the value of that bag? If that bag is I don't even know, Louis Vuitton. I don't know these names, guys. I'm not into this. But let's say it's a Louis Vuitton bag. And you know this is a Louis Vuitton bag, but everybody else thinks it's something else. You know its value. So even though you see a price on it, a price tag on it, you know it's not $50. That's $500. Okay. So in terms of this company, the stock price, we see a price in the stock. And you think that's the fair price because that's what it's trading at every day for the last 6 months. That's not the value of this company. One way to look at the value is what you just did, which is take a look at the earnings and do a forward PE, not a trailing PE. I want to explain to people the difference between trailing and forward PE shortly. Because it took me, I'm learning. That was one of the things I first learned about 5 years ago. And it's like, okay, cool. I got that now. But so the value of a company is not just the earnings potential, the growth of the company. Now you look at assets that it owns, and then you look at its potential to win the market, right? And that's where, even if you don't put in the bots, and if you don't put in FSC, that's fine with me. That's fine. It's not yet there. Fine. Don't add value to that. I do, because I'm very optimistic and I can see whether or not a company is going to solve it at some point in the future. But even if you don't do that, you can already see that this particular company, Tesla, is undervalued with the price that they're putting on it. Then you can ask the question, why? Why are all these people pricing at low price? Why is it not a high price? And the same thing happened with Apple. And we all now know today its true value, and everybody's caught up with the right price for it. But back 5 years, 10 years from now ago, it was totally underpriced, right? Same thing's happening.
So let me just go, then Xander, you're going to go, but this is in my head. I want to get this out. So you poo-pooed my initial point, but that's what I was talking about. That
Okay.
Louis Vuitton bag, the price is 50. No, that is the price. If it says 50, that is the price. You can buy it for $50. The value is assigned by the world. To me, I assigned the Louis Vuitton bag nothing. I don't want it. I don't need it. It's a zero. So that's what I was saying. What does it do for society? So if everybody loves electric vehicles and it helps the world with climate change, and cars are driving itself so people can make money off of it and earn passive income because they own a car that could drive itself, and they have these bots they could buy and people could use it in their kitchen, that is assigning value to the world. So the market cap will go up because everybody in the world wants it. Only a fraction of the people want a Louis Vuitton bag. That has no value. So that's what I was trying to go at. The value is in the worth to society. And the things that Tesla are doing are so valuable to millions and millions of people. So my initial point was perfect. You didn't quite get it. Now I think you do.
Okay,
Go
I
ahead,
do.
Sam.
I do.
I actually I had a, you made me think of something different, and that
Sure.
was trying to, like we talk about these PEs and the multiples that you put on stuff. When I entered the business world, I looked at it like, if I invested, let's say $100,000, how many years would I need to receive a dividend or a payment, to return my money? And then everything after that is kind of gravy, so to speak. So that's the metric that I measured. How, if a business is successful or profitable. So like when you look at or it's worth doing is what I'm trying to say. So when you look at like something like Tesla, it's the price that it's trading at is today is going, it doesn't bake in what its value will be in the future. So
Right.
if you're, now people like to say that it's already priced in, and that's what this multiple communicates, but there's risk attached to that. So if you go out a decade and this bot actually happens, and the deliveries actually happen to be 20 million, which every bear or anyone criticizing says, how can this be? That's more than Toyota. They're valued at more than all of these companies. So like all of those negative things, to me, I don't see that as an actual risk, because the consumer sees the value of Tesla, right? You're seeing that it is a better way to do things. It's a better mousetrap. So like doing that computation on, is it worth investing money, and how long will it take for me to return that capital with interest? That math is what I look at. Is that a valuable stock, or a valuable company? I hope that made sense in some sort of
Yeah.
way.
I thought, just to tie it up again, value. Everyone has a home, right? So the energy business, it's applicable to everyone. Most people want a car in some form, so it's applicable. Most people would love to have a servant, so it's applicable. So that's what I'm saying. Go back to Herbert's purse thing. There's a fraction of people that want a Louis Vuitton, so it's not very valuable. It's valuable maybe to that person to make a statement. Look, I have money. Look, I'm special. But it really doesn't have any value to society. So that's why the market cap of a Tesla is huge, and the market cap of I don't know what company Louis Vuitton is probably a fraction of nothing. Go ahead,
Right,
Herbert.
but well, the value becomes safety, right? That's a huge value for Teslas.
Yeah.
Right.
I think we're talking about the value of the stock versus the value of the company for buying a stock versus the price. And you've conflated the value of the company in terms of the goodness for the world, which we're talking about investment right now. So it's just an
Right.
added bonus. Okay. I want to explain the difference between the PE ratio, trailing versus using the forward. And I don't think I can explain it really well, but I'll try it. And then I need you to explain it to me better, to everybody better. Okay. So I think that the way it works is this, right? So one way to know if a price of a stock is correct is you look at the earnings, and you'd say, how many years does it take for that earnings per year to be able to make up the proper price of that stock? Correct? So,
Yes,
so
you could
if I make $100 every year, then
right.
some people might be willing to pay me $1,000 today because they know that in 10 years I'll make $1,000. So my worth future forward looking is and that's the PE ratio is now 10 years to pay off based on my earnings. Okay. But when you look at a stock table, if you look up Yahoo Finance and looked up Tesla or any stock, and you look at the PE ratio, it's actually the trailing PE. So they're looking at the last 4 quarters and telling you that number. So if you see a number that says, let's say 200, and people are freaking out going, why would I pay for a Tesla stock that has a 200 PE ratio, which means that it's going to take them 200 years based on their earnings per year to pay that off? That's ridiculous. But in fact, You should not be looking at trailing PE, because this is a growing company. You can do this for companies like Ford and others, and that's very fair to do that. But you should not do that for a growing, fast-growing company. You should be looking at forward PE, because obviously they weren't making any sales 4 quarters ago. And then they doubled every quarter. They were just outgrowing the number of cars they're selling and how the revenue is skyrocketing. So you cannot look at trailing. You need to look at forward. So one way that people do this is they will take the current quarter earnings and multiply it by 4 and say, that's my forward PE. And some people will actually do the right way. So you're thinking, okay, if this quarter I made this earnings and this company's growing, what's the likelihood that they'll at least match this quarter every quarter? Very good. So that's safe. Another way to do it is you take that and you go, you actually, put in estimates of what the growth will be.
That's the better way.
James Stevenson does.
The better way.
And so forward PE is really critical to evaluate. And then here's the other kicker I think that people are missing is that if somebody says to me, I will not buy Tesla stock, it's too high right now. Today, the PE ratio says a 100. 100 as of today, 100 trailing PE. So what they're saying is that based on the earnings, I look backwards the last 4 quarters, it's going to take 100 years for me to pay that back. That's ridiculous. I'm not going to pay a PE of 100. I think 17 or 15 is a fair number, or 20. What people are missing is that this company doubles every year, 150% growth each year, 50% growth each year. And so the PE ratio will fall very quickly by year from 100 to 50 to 25 to 12.
Right.
If everything stays the same.
Yeah. If they keep growing, then yeah. If the price stays stagnant,
and the price stays stagnant, you see.
Right.
So it's like people need to understand that when you're investing and you're choosing your investment, you need to look forward, not backwards. You look forward.
But Herbert, real fast, you're right in what you're saying. But that's why you have different types of investors. There's some people that don't want to be growth investors. They want to be value investors because there's a little bit more risk on the growth side. Because if the growth doesn't come through for whatever reason, you're going to, maybe we talked about it, you're going to get a stock collapse, right? Because once the growth stops, you're dead, right? So you have to be wary about that. That's why as growth investors, there's big reward, but there's also risk to the downside if that growth doesn't come through. And the only other thing I'll say real fast, you're right. So if you get a double in the EPS and the stock price didn't really move much, the multiple will come down by half. So yeah, that's how you can get more reasonable valuation. That's why I like Tesla as the fundamental business, is because, as they get bigger, I don't know, maybe it slows down. But if you believe in these robo-taxis and other things, that's where you get these crazy numbers that nobody really wants to talk about because they're so outlandish. You get kind of, left out of the room because that, 50,000 stock price and all this stuff. So I just keep it simple with the E business growing as it is. That 100 trailing can become 60 real quick, and you can still get a double in the stock price because the earnings is coming through so fast and so heavy.
And you should never look at trailing. So you look at 100 and you laugh at that.
Look at everything. There's nothing wrong with looking at everything. But yeah, you should take in mind that 100 could turn down to 60 real quick if their earnings explode. Yeah. Go ahead, Xander.
Yeah, with this kind of go ahead, Herbert. You want to say something?
Well, I was just going to repeat what we learned last week, which is because it's Q3, Q4, this is different than Q1, Q2. When Q3 earnings come out, that's when the analysts start looking forward to 2023. And then they will do a forward PE on the Q3 earnings, and that's why the stock will actually rise in the next several months.
Possibly, but this is so short-sighted, right? So the real calculation that should be done is a discounted cash flow. You want to look out really far and give a guesstimate, right? If a company is guiding for 20 million vehicles, you can go and take a conservative position. You don't need to assume that everything is blue skies and everything's going to go perfectly. So cut it down by whatever percentage that you feel, and then just apply let's say it's 10 million vehicles instead of 20 million in 2030, and then apply an average selling price, the ASP, and do that math. Look at how much what will be the earnings per share, and then take there's plenty of spreadsheets that you could download online and play around with the numbers. That's how I built conviction. It was taking those types of things, yeah, and looking at how much money will this company generate. In business, it was very simple. Is there money in the bank account? I didn't need a bookkeeper. I didn't need any, QuickBooks to understand that my business was working, because at the end of the month, there was more money than there was in the beginning of the month. This is what Tesla is doing. It's continuously, right? It has no debt. It is putting cash flow into the coffers, and there's just money that's going to start piling up as they continue to grow. Something else that I wanted to highlight is hypercharts. Has been so amazing to shut people up about their negative things, not understanding what automotive gross margins are, and then actually looking at like hypercharts. I think it's .co, and you could look for Tesla. So just type in hypercharts Tesla in Google, and you get these nice things. You can switch between quarterly and annual, and you get a visual for the math, and that has really helped turn people that have been very negative on the company to go, oh wow, that's actually impressive, because you can see visually that it's not just a linear growth rate, it's a exponential.
So here we have a company, Tesla, that is selling a product at $50,000 all the way up to $100,000, even higher. So if you take all those cars and you do an average selling price, let's say 50,000, or even just pick the low number, it's $50,000 per car, per product. And then the thing people keep missing is gross margin. It used to be that all these car companies would sell a $50,000 product, but they don't make a lot of money because their gross margin is so low. It's like 7%, some ridiculous number like that. But here, Tesla has been able to figure out somehow to make over 30% margins, which is equivalent to what Apple's doing with a phone, $1,000 phone, and getting 30% gross margin. They're doing it with a $50,000 product. And so this is like a cash machine. Sorry, I'm stealing your catchphrases.
And that's before energy, right? And that's before you get to the other stuff.
Or subscription.
So you're right, Xander. Let me just chime in on that. Now, this might be an unpopular opinion, but you're right. When you do a discounted cash flow 10 years out and discount it back, I understand all that. The only thing, though, I think it's still good to do a 1 year or 2 year forward PE, because if say you didn't own the stock and you missed the 20x and you're just sitting there, hey, do I want to start a position in Tesla? You don't want to get caught maybe at a cycle where the valuation maybe is stretched, where we were trading at 200 times and the market flipped and now we're trading 100 times, and your stock price, if you have significant money in, goes down 50%. So all I'm saying is it's good to have a valuation framework, because other investors use that framework. And they might not be looking at your 20 million. They might say, Tesla ain't doing no 20 million. So his discounted cash flow is worthless because they're going to do 6 million cars in 2030. So the only thing I'm saying, I'm not saying Tesla won't. What I'm saying is you have to be leery of that, especially if you weren't in Tesla for a long time and you're new to the story, to understand, to get a basic framework of where are we valued now, what are the earnings, where are the earnings going, how fast are they growing in a 1 to 2 year period. So you're not caught down 70% because it's run and you really didn't understand the valuation in this 12-month moment. That's all I'll say. But you're 100 spot on that.
Yeah, but that's because you're a momentum trader, right? Herbert
it's not a momentum trader. It's a smart trader.
Goes in one ear, comes out the other, because ultimately he's looking long, and at any point, exactly, right there. Go on.
Right, but see that top buy? You don't want to be buying up there
and
then watch it go down. No, you don't. You want to buy low and sell high. Okay. No, you're wrong. You need to buy low and sell high. You don't want to buy high and wait 10 years for it to be higher. Wrong strategy.
Not with this company.
I'm telling you guys, you want to get in when the valuation is attractive.
Christian, while I agree with you, the point is, that there's, before the COVID drop, if you got in at the very high of the market, what happened, right? Like, are you saying that people should wait for a more attractive PE? What are we saying here?
I'm saying, well, I'm looking at from Tesla from, years back. I'm not looking at it like in a vacuum. What I'm saying is, when you start a position in a company, you could start it now. I think it's great value for Tesla right now. I'm buying it now. What I'm
Okay.
saying is, I was just using the example of using a forward PE, even though, yes, people very sophisticated want to do these big discounted cash flows and use all these assumptions out to 2030. The farther you go out, the harder your assumptions are going to be. They're not going to be accurate because you're going out 8 years. How do you know what's going to happen in 2030? You could do a great guess, but you may be way off. But I have a better understanding of what Tesla's going to do 12 months from now, 24 months from now, 36 months from now. Every year I go out more and more and more, the story gets more murky. So to value the company, I rather do it on maybe a 3 to 5 year basis rather than some people want to go out to 2040. That gets very difficult to manage that expectation.
So Christian, I think to push back a little bit, I think it's a matter of where you are. Do you have a position built out or not? I think in order to build conviction, you have to start with like something like a discounted cash flow, go out really far, look to see if there's potential. And then if you're going to manage a position and manage your risk, then something like a forward PE is great, because you can see if whether you're like I like the moving averages. If you're really far away from the moving average, above it, and your forward PE is obviously going to be, closer to that 100. But with that said, if you go back a couple of years, those numbers were insane. So if you were measuring at that, then you're one of the people that were saying that it's overvalued and you shouldn't invest. But they weren't producing earnings. Now they're starting to produce earnings, but these are peanuts compared to what they're going to produce if you start looking out just a little bit further than 12 months. That's what gives me the confidence to just continue to plow money. As soon as it comes, I just shipped a whole bunch of money to my brokerage this morning.
I agree with you. That's why we're the three bulls. But we're giving good take. This is good for the audience too, to kind of see how different people think, right? Some people do think about it different ways. So it's just a good, I love the discussion. It's awesome.
Okay. So the next section is bulls in training. We'd like to just educate folks. What resource would you recommend to people? And that's why I shared this slide. And this is a tweet from a guy named Brian Feroldi, Brian Feroldi. He has very simple graphs that explains investing. So I would recommend people, and I do, follow him. And so he has this chart that I'm just showing up, and it made Christian throw up all over the place. But basically, it shows a chart of a graph of a stock going up and down, and then it has the word buy all over the place. No matter where it's at, just keep buying it. And I know that Christian says, no, you sell it this high. So in my case, I am doing what, another quote from Charlie Munger: investing is where you find a few great companies, and then you sit on your ass. And that's all what I'm trying to say. That's it. Basically, is you find a good company, you have good conviction in it. If it's a regular company, then I wouldn't go all in. Absolutely not. You should have a basket.
Right.
But if it's a really once in a lifetime company that you have tremendous belief because of all your evaluation and study that it's going to get those earnings, with the caveat that, in 2 or 3 years, you have to be prepared. So that's why I love what you said, Christian. Love it. And I think you're right. But the reason I don't just look out 2 to 3 years is because, like you said, I can't tell you what's going to happen in 2030, but I have good conviction what's going to happen in 2 years. In fact, I think it's the opposite, Christian. See, everything you say, I say the opposite. Because in 2 or 3 years, 2 to 3 years, anything can happen. China, the economy, COVID, political war might have. Oh my God, is that what just happened? These things happen. However, if you look up 5 years, 8 years, it's undeniable what's going to happen with a company like Tesla being able to win markets like an EV revolution, like a robotaxi revolution. It's going to happen. It's just a matter of time. So I've actually have a better ability to say, I can predict what's going to happen in 7 years more than I can predict what's happening in 2 years. Certainly what I can't predict in a week, right? So
I agree with you in a sense, but let me just push back a little debate. I agree with you long term. You got to get the company right, though, right? Because there's a lot of graveyard companies you invest in, you set there 20 years, you're down on your position. We talked about that before. So what I'm saying, though, is, again, let me just say this. It might not be the popular. If you were invested in Tesla in 2019 and you ran a 20x, I don't know that anyone would blame anyone for taking some profit. That is just my opinion. And if you have a significant amount of money, take some chips off the table, move it to the side for a rainy day, and see what happens. I don't think that's an unreasonable position. Now, I know, right. So now moving forward, I agree with you, but the buy thing, yes, if it's a company and you've got the story right and you know that it's going to go, because it's also a risky strategy. If you're doing all the buying, and in 5 years your story didn't play out exactly the way you did, and the market's doing much better than your stock, you're missing a lot of opportunity costs. I'm not saying that this is going to happen. I'm saying, though, there are risks by doing the buy in one company, because you don't know exactly what's going to happen, and you're putting all your eggs in one basket. Again, I know I'm going to get pushback on that, but what I'm saying is there is risk in everything. And if you look at the greats like Charlie Munger, Warren Buffett, and all that, they also at some point take profits in stocks. They don't just hold the whole position the whole time. They layer some off and they find some new opportunities. Some things they hold for a long time, but they carve out percents here and there, 5% a year, 2% a year, and they take some profits on big gains. And the last thing I'll say real quick, what can people do? I was thinking about this. Read books. Peter Lynch has a great book, One Up on Wall Street. It shows how retail investors, with all the time they have and the knowledge in one specific stock, where Wall Street is looking at 30 companies and they don't know what's doing, you have an advantage because you could focus and really dig down on the research and do a one-up on Wall Street because you know the story before Wall Street gets to it. And that's the key to get in before the big money runs it up. So that's a great book. And also Richer, Wiser, Happier is a great book. It talks about the great investors in the past, like a Charlie Munger, like Monish Pabrai, who's a disciple of Warren Buffett, Sir Templeton. He was a great investor. How they thought about markets and how they invested to make their way through the world. So that's another good one.
Xander, what do you recommend?
Well, I shared a little bit about like charts, and the financials really is the big thing for me. I watched YouTube videos and got conviction, and it's really it's been years of getting my mind right about how to think about just life in general, that I don't know if I have like a specific thing. I think it's just follow your curiosity. The big lesson for me as a kid was like my dad would say, that's not how it's done. And I would challenge that. And I say, why not? And if the physics, right, is like this first principles way of thinking. If the physics or if your need, your feelings inside say that this will work, if I didn't trust that, I wouldn't have become a Tesla bull. And that's, I had to convince everyone around me. So really the biggest thing for me is just find a way to believe in yourself and in your analysis of companies, right? Of great companies, because if you like Warren Buffett and Munger say, is you just need 3 good companies and have the ability to evaluate whether this is a business worth buying, and you don't need anything more than that. And if you have that skill, how do you build that confidence in yourself to know that your math is better than the guy that's trying to convince you that you need to diversify?
Yeah,
that's a
but
good
Xander,
point.
you have to trust your gut. I agree, but like someone like Buffett never would have invested in Tesla, right? Because he didn't believe it in Musk. He didn't believe that they were going to turn profitable. There's a lot of people that didn't believe it. So where you had the advantage and you were a better investor, or we were a better investor, and Herbert, especially getting in like in 2012, he saw the story and believed in it, where the numbers didn't make sense at the time because they were losing, what, 800 million a quarter? They were burning cash like crazy. And you needed inner belief in Elon and the team that they were going to turn it around. And that was, incredible to go through that. That's why Tesla investors have a lot of scars, because the great investors, most of them, except Ron Barron, he knew the story, but the biggest thing he had, he believed in Elon. He believed in Elon. All these other great investors looked at Elon as negative. Ron Barron looked at Elon as a positive.
Yeah.
But sorry, Herbert. You're talking about like the circle of competence and from Warren Buffett, and that he would stick to what he knows. But he didn't invest in Apple, even though, right, or Microsoft.
Well, he caught
For
it later. He caught Apple
right,
later, and when it was a
right,
cash machine and dividends and buybacks. And I don't think he
exactly.
even did it. I think it was his disciples. I don't think he was the one to pull the trigger.
Okay, well,
And
okay.
but and that's the part that I want to highlight, is that if you can see that cash flow, right, when it becomes a value business, why would you want to buy it when it's a value business already? If you can spot the growth,
Yeah,
then it becomes
yeah.
it becomes an easy one for me. But
We're in
Herbert,
agreement with Xander. We're just making a lively debate. We're in agreement. We're both bulls.
Okay,
I
well,
agree with you 100%. Yeah,
yeah.
go
hold
ahead.
on,
Xander.
Herbert's
Yeah,
gonna lose it.
yeah, I'm
Herbert, go
losing.
ahead.
I'm
You're gonna
losing a
lose.
little bit, guys. I'm sorry. I'm sorry. I'm not losing. I'm just joking you. But
The audience is loving it. They're high
oh, no,
fiving all down there, Herbert. They're
I
loving
get,
it.
I get a little bothered talking about Buffett too much. I mentioned this. I threw away this comment a long time ago. I'm not a fan of Buffett and those guys, and I have this little thing about why people put so much. Oh my God, this guy's the greatest investor in the world, and this one too, and we should learn what they do and how they do it.
I'll tell you why.
Wait up.
See, when you
No,
say stuff like that, Herbert, I got
no,
to tell you why.
no. You don't have
Yes,
to tell me
I'll tell
why.
you why. Here's why I look up to Peter Lynch, because Peter Lynch,
Go.
this is important for the audience. Peter
Why?
Lynch ran a fund for 13 years, the Fidelity Magellan Fund, and he smoked the S&P and he smoked every investor, and he didn't have one stock, which is easy to make great returns, because if you have that one stock blow up, you're great. He had hundreds and hundreds of stocks. He was the only investor in the world I see invest in so many companies and outperformed the S&P, so great over a 13-year track record. So we could learn from him. Warren Buffett, you may not like the Berkshire Hathaway bros, but you can learn a lot from Warren Buffett. Look at his annual returns over 50 years. So if you want to ignore that and not look at that and say, hey, maybe this guy, I could learn from him in my investing, even though I don't agree 100%, I can take some principles and I can apply that to my investing. That would be silly. You should look at the greats. You don't have to do everything they do, but you could take a lot of wisdom from errors they've made and successes they've had.
Go Herbert. What's your response?
I guess, okay. I mean, there's nothing you said that was wrong. Okay. Let me start with that. Everything you said is correct. You're right. Blah, blah, blah. Okay. By definition.
I'm disagreeing with you though.
By definition, what investing is, it's a risk. Nobody knows. Okay. If everybody knew, we'd all do the same thing and we'd all going to make 10x our money and we'd all be very rich. The whole point is some people make money, some people don't. But in order for you to make money, you are seeing value in a stock, in a company before other people do. When others are actually saying the opposite, you see differently. And that's how you make money. But the moment when everybody is buying this thing because it's like the greatest thing. My hairdresser said, I just bought $10,000 worth of Bitcoin. That's when you go, okay, maybe I got to step back and think. Is this just the beginning, or is this something that's already saturated and it's no longer the right place? You know what I'm saying? This is
I agree with you, Herbert, but time in the market and timing the market. I know everyone says time in the market is better than timing the market, but I'm just being realistic. Tesla has had a huge move. If you didn't catch Tesla a couple, 3 years ago, your returns on Tesla stock are going to be less than, catching it later in the story. So all I'm saying is, there's judgment points in the story of an equity where how heavy do I want to go? And I agree with you. Tesla has a long way to run. And your returns, though, are based on when you get in on the story. That is important, right? You just don't want to buy recklessly. You want to buy when you think the valuation is compelling. And I agree with you. Tesla is compelling right now. But that's how you should think about it. You shouldn't blindly say, oh, Tesla's going to 10,000. So even if I buy it at 7,000, it's great. Well, no, if you go from 7,000 to 10,000, what's that, a 30% return? If I bought it at 1,000, it's a 10x if it goes to 10. So what I'm saying is the time you get on the valuation does matter on the returns you receive in the future. Go ahead.
Agreed. And Herbert, like to I think the proof is in the pudding. To say anything negative about Warren or Buffett, not Redlick, but Warren Buffett and Charlie Munger. It's like these guys are the reason that, like, I posted this on Twitter, a clip of Warren giving permission to go all in on the stock. Because if you can actually evaluate a business, you see, you're correct. You actually see the value of it before everyone else does. That's my entire thesis. And real quick, Christian's point about learning a little bit from everyone, that's the entire secret, is don't listen to everyone like it's gospel. Take a little bit from everyone, and everyone has something to offer, and then make your own path.
Okay, here's the reason people ask me why, because I made this statement twice now. Last episode and this episode, that I'm not a fan of the Buffetts, the Buffett Berkshire Creditor. The reason I am not is because they, in my mind, are professional stock traders. They have made, their billions because of buying a stock and selling a stock. Wait. So
long term.
No. I get that they own huge amounts of a company, so they're not just a stock, but they actually own a huge amount of a company. I get that whole thing. But
Herbert, I got to stop you real fast.
No, you're not going to stop.
Go ahead.
You're not going to stop.
No, because one of the quotes of Warren Buffett is buy a company and hold it till you die.
No,
so I mean,
I'm not saying that they're a trader. Fine. But they basically have made their money as investors. And they're not. I'm a product manager. I'm a startup CEO, founder. I like to build products that add value to this world, that add value to people, that I can sell and make money from. I have deep respect for people like Steve Jobs, Elon Musk. I get what you're saying. Respect for somebody who's made billions because they bought a company's stock and then watched it go up, and then they decide to sell it. And then, I'm so good at knowing when to buy and to sell, and I've made billions because of that. But they've not added one bit to this world, especially when they choose companies that are not good for this world. They make all their money on candy and Coke and oil companies and railroad and all that stuff. They don't care what it does to the world. They convinced Bill Gates, by the way, to have the largest short in Tesla because they're buddies. That's why Apple, Warren Buffett would not invest in Apple for years, and because he's friends with Bill. Okay, forget all that. That's all.
No, Herbert, let me just say, I'll give you a compliment. Now you're stating it better. What you're trying to say is you value and admire people that produce and add, value to society rather than someone who just has a bunch of money, invests in the company, and gets a good return. I get that. I understand what you're saying. You stated it better in the last 3 minutes.
I invest in Tesla because of the product and the business and the intelligent, strategic ability to win in business. That's why I'm doing this. Not because I think, because if you start with that fundamental, then you know that this company will survive through the ups and downs. It will. That's why I'm going. Like, they only have 2% of the automobile market worldwide. So who cares if there's competitors? It's all that, you add all that knowledge about. I'm not going to wait until I hear Buffett say, I think Tesla's a good buy. I'm going to say it's a good buy. I will decide.
He might never buy Tesla. That's what I'm saying. I'm not saying
anybody. Just because somebody says
what I'm saying is Warren Buffett, if you read his books, you could understand the investing game, and you could still use those principles even if Warren Buffett isn't a big Tesla fan. And if you listen to Warren Buffett lately, he has talked about Elon Musk, and he said what he's done has been great, and he's beaten the legacy boys. So Warren Buffett is fair-minded, and he's given Elon his due. Now, it hasn't been ecstatic. He hasn't gone over the top. But I think Warren Buffett respects Elon Musk. Bill Gates respects Elon Musk. But yes, they do things differently, and they have a different point of view. But I think they do have respect for the man for what he's accomplished.
So we have 15 minutes. I still want to cover the China economy issue. I think we're going to have to push margin loan once again. I'm so sorry, guys. We'll push that. It's not as don't put your hopes up. It's I think important information, but it's actually not the thing I'd recommend right now, given where the interest rates are. So it's okay that we're pushing it. One thing I do think that has a tremendous potential impact to Tesla in the next year, 2 years, or 3 years, so sorry, Christian, but it could, is what would happen if the China economy just goes to shit. And Sanju, our friend Sanju, brought this up several episodes ago. He said, how much of an impact would the economic iceberg of China's debt bubble have to Shanghai's factory and Tesla's future. So let me set this up so people kind of understand that if this is a real issue or not. And it's looking like it could be a real issue, okay? What's happening is that China's facing a real estate crisis. It's going to threaten the entire economy. There are now mortgage boycotts. So these investors who are looking to buy apartment houses, they're boycotting paying their mortgages. It's now spread over 100 cities, and we're talking hundreds and thousands of protesters. So what has happened, just like what's happened in the US, right? There was a property boom, and all these people were moving to the big cities in China. The property boom contributes to 1/4 of China's economy. Just like the US, it's mostly speculators that are trying to flip these apartments because they were just raising the prices and be able to flip them. So the developers start to build more and more apartments, and they needed to borrow money in order to build these apartments. So the government saw a couple of years ago that this could become a bubble that's going to break, and it's a significant impact to their economy. And so in August of 2022, so this is just very recently, August 2020, I think it is, they implemented this policy called 3 red lines. And they basically said, a property developer, we're not going to be able to let you borrow more money, get you more in debt if there's these 3 metrics that you are not over. We limit which developers can borrow. What they didn't count on was the zero COVID policy that then just made everything worse. So now you have these developers who are no longer able to borrow the money. It's no longer freely available capital. They have buildings in place, and they can't build new buildings to build. It's like a Ponzi scheme. And they haven't built the buildings that they've already sold to apartment holders who are paying mortgages on non-existent homes. And so now the mortgage holders are all realizing, you're not building the building you said to me. I'm not going to pay my mortgage anymore. So this has gone to the point where the largest property manager, Evergrande, almost went at default, and the government went to save the day. There's apparently 328 developments where the mortgage holders are boycotting payment. So this is a very precarious scenario. Could it completely crash the economy in China? If it does, what does that mean to Shanghai, Giga Shanghai? What does it mean to Tesla, sales, and so forth? Woo! Sorry, guys.
So that was good. So I'll go real fast, and then Xander. I'm not an expert. I'll just say right off in Chinese, the economy in China. From what I've read, you stated it pretty well. I believe the government will steady it, and even though maybe the GDP will take a hit, they'll come out of it as long as they stop this silly zero COVID policy, because that's a nightmare. That can't be. If they try to implement that again, they will have major problems, and I will change my tune on Tesla stock if that Shanghai factory gets impaired in any way for any length of time. I'm just being honest. Number 2, I don't worry about it right now, as long as Shanghai, and it looks like for now, COVID is under control and Tesla is pumping out lots of cars out of Shanghai. We're at crazy run rates. Everyone knows maybe the specifics, but they are doing more than ever. And as long as that continues, I'm not really worried about a mortgage problem, because the demand for EVs in China is great and they want Teslas. So as long as that factory is open and that we're at the beginning of that S curve, not maybe we're a little bit up there, but we're still got a huge chunk to go. They will sell every car they make. So I am not worried. I'm not worried about your particular issue when it comes to Tesla. As long as that factory stays open and COVID's not an issue, it doesn't bother me. Xander?
Yeah, I think we're aligned there. Something that I was thinking about in response to your question, Herbert, I think the same, that the factories are going to be ramping. Yes, like I was just presenting to friends about why was there a dip in gross margin for Q2, and it was because of the China shutdown. So there is a possibility that if they are forced to shut down, that it can have a short-term impact. But long-term, I don't think that it's worth thinking about. I'd actually like to state something that's it's tied to crypto. Like, I've been very crypto curious for a long time, but I've never ever bought any, because it's like this greater fool theory. And this, but when the real estate market in China becomes the greater fool theory, why are people investing into real estate that doesn't exist yet and paying mortgages for real estate that doesn't exist yet, which then becomes a Ponzi scheme? Because what these developers were doing was that they were selling apartments, and then taking the money, instead of investing it into building out those buildings, they were going to the next building and starting that process, and then getting new buyers, and that's straight up Ponzi scheme. And so, like, I never understand why people chase these returns for something that doesn't exist. So with, and no offense to any of the crypto people, it's just, for me, I need tangible things. I need to see the cars on the road. I need to see, that I'm buying this building. Okay, I can move in. There's utility and value. We were talking about value previously in this chat, and what value does it have? Oh, the only value is that it's going to cost more in the future. And and then a bear argument that just popped in my head was that someone could say that about FSD, and that's why we're willing to pay 10 grand or 12 grand or 15, and it's that future value that we're betting on. So I'd have to check myself on that one, because I can see how that would be a good perspective. But when you look at the cars, we are getting the value, especially once you get to cost parity with ICE vehicles. I know I went around in a circle there, but that real estate market is it's scary. I don't understand people for betting like that.
Okay, I've got a question for you guys then. Okay. So I think I heard you say this, Christian, but you're saying that if the economy in China crashes, but the factory stays open, now they might not be able to sell those cars they produce anymore to the China market. Maybe they can't afford it. Maybe they won't be able to, the demand will fall. But they can still sell those cars to the unlimited demand all over the world. They'll just have,
yes.
I think I heard you say that.
Well,
So,
I didn't agree. You're right. Yeah.
Okay. So that's an interesting point. Now, the next point would be that, well, if China economy crashes, wouldn't it affect the Asian Pacific? At least they'll be hit. And it might be a global recession, right?
Right. So let me just state it the way I think about it. And again, this is just my opinion. I don't think the China economy is going to crash. When you mean crash, like, -4%, negative, I don't see that scenario. The government is trying to stimulate. I think they've been reducing interest rates, and China can make the situation better, because they are the second biggest economy in the world, and they can do some things to kind of mitigate any major disasters, in my opinion. The reason I don't worry about Tesla, as long as that factory's running, because of what you just said too, China. The demand for EVs in China is great. They have 1.3 billion people. I'm just being an estimate, and even though their EV market is a little bit more developed, there's still a long way to go. So we still are exporting a lot in the front month to Europe. So we can go to Europe. We were doing to Japan. We can go down to Australia. We can still go all over the world. So I still think, even in a tough, if it's a complete crash, maybe this is different. But even a subpar Chinese economy, I still think Tesla sells every car they make around the world, either exporting or domestic into China. So that's why I don't think it's a big worry right now. As long as the factory stays open, I'm not really worried about if the Chinese economy slows a little bit.
Maybe this is an argument for Giga Indonesia, Giga Japan, more gigafactories across the world, but also near China or where other countries. You never know which country will go and something bad happens, and then you got other countries to support it.
Absolutely. Like Tesla, the more you can diversify your supply chains and the more you can diversify your geography, the safer you are as a company. You talk about risk. Now that we got a Europe factory, and now that we got another, Texas, another US factory, we're not as dependent on China. Right now, I still believe we are. That is a profit center, and they are doing great and killing it. But as we keep getting diversified over the next few years and a couple more gigafactories get built, Shanghai becomes a little less relevant. So you take some of the risk away from that situation. Perfect point, Herbert.
Great point, Christian.
Yeah. Okay. It's going to take a few years. Good conversation. Very
Yeah, I
interesting.
loved it.
I mean, we got very excited at the very beginning, and then now we're a little down.
No, we're not down. We're being realistic.
Well, you're talking about risk. Yeah. Well,
You have to be realistic about that. As much as bullish as we are, and as much as we believe in Tesla, and as much as we believe in Elon, we have to have our eyes open to situations. And talking about it doesn't make you a bad person. Talking about it means that you can say things that can go wrong, and it doesn't hurt your conviction. It doesn't hurt your bullishness. But if you can't admit it or talk about it because you're afraid and you get nervous and you want to sell your, like, that's not good. You should be able to have these open discussions, disagree a little bit, and talk about some risk without being panicked. So I think it was great.
Christian is trying to say that there might be a market timing opportunity there.
This is not investment advice.
The market timing for me was 6 to 8 months ago. I'm not marketing timing anymore. I'm very boring. You're more exciting than me, Xander. You're posting your trades. I got no trades to post. I'm just buying a few shares.
That's it. You already went all in. I did pay myself. I know people love this stuff, so I paid myself a little bit this morning and bought a leap for June of 2024. I bought a leap for not a leap. I just bought a call or a couple of them for November. I sent it to Herbert and Christian. Just kind of betting on Q3 numbers and Q3 financials specifically. For me, nothing crazy in terms of position, but just making a little bit of a bet there. I've been trading. I've had calls closed since the stocks going into the stock split, but as of today, as of yesterday, I sold some calls and then closed them today for a decent profit. And so I'm just and then same thing with the put side. I sold some puts going into the stock split, and so today I closed them because we're starting to do this choppy sideways and actually falling. Not just choppy, but we're macro, right? The Friday's speech by Powell has really had an impact on the markets. So, Christian, what's happened with the yields today? Maybe wrap it up a little macro.
So real quick, you're right. Powell, I mean, he channeled his inner Paul Volcker, and he just gave the market, one and said, I don't care about your calls. It's going down. So, but you're 100% right. So Herbert, you can wrap it up. I'll just finish with my overarching theme. So when Tesla got down, and we've been talking about, in those 600, 700s levels, yes, we've come down a little. I think we're in the 8s now. I believe the Q3, 4, and 4 financials will be so strong that Tesla stock will hold up very well, if not do very well, in a shaky macro, because macro is shaky right now. That's why I can't wait for Q3 to come. I want them to deliver those results yesterday, because I want them to show the market how this business is executing, how the margins are doing now that we got all the factories humming and we got all the factories starting to ramp and China's back and there's no shutdowns. I am itching for Q3 to end so they can report those financials, because I just want to see them so bad. I want the market to just understand what this company's about to do. I'll leave it to you.
Thank you, guys.
And then one quick thought was I want to highlight that I didn't deploy all of it. So like this dollar cost averaging, right? As new money comes in,
I'm still doing that too.
Yeah, I put about 25% in today. As the market slides, I get excited, right? So it's coming down. I want to put more in because I see it as a deal.
Okay, here's the summary of what I heard in the last hour and a half. So
be
first
fair.
of all, I'll be fair. I'll be very fair to you, buddy. So first of all, we are 3 bulls. We're all friends. Don't take our advice seriously as financial advice. However, we all believe that Tesla is a once in a lifetime, once in a generation company. You should not listen to any of our individual advice, but you should listen to all 3 of us. One of us believes that you should look out 10 years and look at discounted cash flow. One of us believes that you should look at between the 2 to 5 years. And then one of us believes that you should be able to look at the 1 year to 3 years and look at that. There are risks involved. China economy is one that we can't decide what's going to happen with that. Anything massive can happen, but if that happens, it will affect all stocks. We still think that Tesla is a good investment, and that's why we're doing this. We're all bulls. We want to help Christian, so if you can, he's just started his poor little Twitter account, and he has less than 500 followers, but
I have over 600. What are you talking about? I'm killing it.
He deserves more, guys. So follow him on.
Thank you, Herbert. I didn't need that. I didn't tell him to do that.
Sure,
But
you don't need it. You want it.
No, I just have fun with it. But
yeah. But I'm not kidding. He has very good quotes from
yeah. I try to bring value with it. Yeah,
he has got value, so it's worth it. All right, guys, thank you very much, and that wraps up CyberBulls episode 5. Thanks, everybody. Talk soon.
Thank you, guys. Love that. Peace.